Hello everyone, welcome back to our financial discussion channel. For this video, I'd like to explain what action is actually required based on the different asset class when Fed actually cuts the interest rate. This video, I will concentrate on the first two, which is the stock and the bond. My next video, then I will continue the discussion on cash and saving, crypto, real estate, and others. So over here, I'm going to explain what you actually need to do when actually Fed cut the interest rate based on the different asset class. So basically, this will be the objective of this video. Before I continue, guys, I'd like to urge you guys to help me by like this video. Guys, just give me a few seconds. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer. I am not a licensed financial advisor. The content in this video is for entertainment and education purpose only and should not be considered financial advice. In this video, I simply showing you what I may be doing. Please conduct your own independent research and consult a professional if needed before you commit to an investment. Never invest more than you are willing to lose, and always be sure to read the fine print and the terms and conditions before you commit to an investment. With this, we are ready to kickstart today's discussion. Okay, so when actually Fed cut the interest rate, this is in fact a very significant impact that probably will send ripple throughout all your investment portfolio. Okay, so your strategize mainly will be focusing on these three things. Okay, what will be your investment goal? Okay, so next will be your risk tolerance. Okay, so basically these two go hand in hand, which means that high gain, okay, you definitely will have high risk. Okay, and low risk, you actually will have low gain. There is never possible to have high gain and low risk. Okay, so this doesn't work well. Okay, so if nowadays there will be a lot of scam, so for scam probably will be high gain, very low risk, and this is almost not possible. And then we come to the time zone, okay, whether is it for long-term or short-term investment. So in short, this is a breakdown what a rate cut means and what should we be doing when actually Fed actually cut the interest rate. First and foremost, we need to understand, okay, why Fed actually cut the interest rate so that we can anticipate the move. Okay, so typically, okay, when Fed actually cut the interest rate, they actually want to simulate a slowing economy. Okay, but now you probably will wonder, okay, the share, they are all-time high. Okay, which means that the economy should be working well. Okay, why Fed actually will consider cut rate for this time round? I believe is because of the unemployment rate. This time round is a little bit puzzle. Okay, because the economics is doing well. Okay, you can see that the shares reached all-time high. Okay, but they are not higher enough manpower to expand their work scope. So therefore, because of this, the unemployment rate in US keep on climbing, and therefore Fed actually need to cut the interest rate in order, okay, instead of stimulate the economy, they also need to ensure that people can find job easily. Okay, so basically this is actually what happened to current situation. So when Fed actually cut the interest rate, they actually makes borrowing cheaper, and therefore because of this is going to encourage people to spend more and do more investment. So therefore, for investment, there are actually two major implications, as you can see from here. First, because the cost of money, okay, which means that the cost of borrow the money become lower. So therefore, when people actually save money inside the bank, they become less attractive, okay, because you know that when interest rate cut, your interest that actually generate from the saving in the bank also will be impaired. So therefore, because of this, okay, this actually force investor, okay, because like for example, imagine a lot of retired people actually put money inside the bank, okay, because it is very safe, and based on earlier on, they actually can generate very attractive interest rate. But now with Fed cut interest rate, okay, the so-called the interest that we earn from our saving become unattractive. And because of this case, so this actually push okay, not only on investor, people that retire, okay, stand a very big portion. They want to have a better return. So therefore, they need to look for another asset, for example, like stock and bond, in order to earn back what they actually used to earn in the early days based on the so-called interest rate with the bank. Next, future growth is expected. Okay, so what does this mean? Okay, the cut, okay, is basically a signal that the government is trying to boost economic activity, which can be good for corporate profit in the future. Okay, so you probably see that currently, okay, Donald Trump actually indicated that at the end of 2025, government will actually simulate the economics by pumping so-called money inside. So therefore, once this thing happen, okay, the future growth is actually anticipated. And that's a very good news, okay, for a lot of asset class also. Let's take a quick look on the different asset class. Like I mentioned earlier on, this video, I will concentrate on the stock. Okay, so let's concentrate, okay, on your stock portfolio when Fed actually cut the interest rate. So in general, okay, this is actually favorable. However, you need to be very careful. You need to select the correct stock. Okay, so lower rate can boost stock price. Okay, we know this from textbook. Okay, so basically when Fed actually cut the interest rate, okay, so this will be good in terms of stock price. Companies can actually borrow more cheaply to expand, and consumer will most likely spend more. Okay, so this tends to benefit certain sector more than the others. Okay, come to the favorable. So basically the growth and the clinical stocks, for example, here. Okay, companies in technology. Okay, so basically this is to emphasize company that is actually in the area of technology and also in the area of consumer. Okay, for example, retail, automaker, and small caps. Okay, they often perform well as they are more sensitive to economic growth and rely on borrowing. Okay, so the keyword is borrowing. Okay, so any companies can they emphasize on borrowing, the chances for them to benefit is actually the highest. Okay, so for example, the companies in technologies, they tends to borrow to expand. Consumer, because consumer actually spend more. So because of this, okay, the consumer will benefit more. Small cap, okay, in fact, small cap is very sensitive, okay, to a lot of possible changes. For example, Fed cut the interest rate, they are going to impact the most. So next will be under the consider dividend stocks. Okay, so when interest rate fall, the stable income from high dividend stocks, for example, REITs, utilities, consumer staples, they become more attractive relative to bond. Okay, bond, they will be impact also. Okay, so therefore people may want to invest onto stock that actually offer dividend stock. However, be aware that some of these bond proxy stocks may be underperformed if the economics heat up significantly. Next, okay, I want to emphasize that be cautious with bank. Okay, but I think Singapore bank should be okay. Okay, but keep this in mind. Okay, I share this in international. So basically, for some of the banks in overseas, okay, so be very careful. Why? Okay, because lower interest rate basically will cut the net interest margin. Okay, so basically, this net interest margin is actually the difference, okay, between what they pay on deposit and the bank actually charge for loan. Okay, so basically, in short, bank will be affected when Fed actually cut the interest rate. Okay, once Fed cut the interest rate, because the interest that we actually pay for our loan to our bank, okay, will be impact also. They will be cut. So most likely, we will prefer to take a loan. Okay, because of the so-called stringent on these two. Okay, the bank will be squeezed. So therefore, this will actually hurt their profitability. Okay, so basically this is on the stock portfolio. Okay, so now I like to explain your move on stock. Okay, so focus on company that benefit from lower borrowing costs and increased consumer spending. Okay, so earlier on I have mentioned this. Okay, so which company to invest on stock? So before you so-called start to invest onto that particular company, okay, do a background check. Okay, how the company actually make a profit. For example, the company made a profit, okay, simply by borrowing more, okay, in order to expand more, then this is most likely to be benefit for this company. And also, you must also aware that are they in a consumer so-called environment? So typically, when Fed cut the interest rate, these two types of company, borrowing costs and also the consumer type, they will benefit the most. Coming to the growth stock, technology and other growth-oriented company often rely on borrowing to fund rapid expansion. Okay, so basically this is what I mentioned earlier on. Those technology and those growth-oriented company, they will actually rely on borrowing in order to expand faster. Lower rates reduce their financial costs and make their future earning more valuables in today's dollar. Okay, for example, okay, the QQQ. Okay, so basically this is a very good growth stock that you can consider. Next, clinical sectors, companies whose fortunes are tied to the health of the economics tends to outperform. Okay, so which means that company that is actually relate to the economy, they will benefit more. For example, under the consumer, okay, Amazon, Sheng Siong in Singapore, Singapore Airlines in Singapore, they will benefit more. Okay, as all these are consumer. Okay, so when Fed cut the interest rate, people have more money, they will most likely spend on Amazon. They will buy more stuff in Sheng Siong, and they probably will consider to take a tour. Okay, so as people felt actually more confident spending on non-essential. Okay, so when Fed cut the interest rate, another one will be on the financial. Okay, bank can see increased loan demand. Okay, so because it's much more easy, lower so-called cost of borrowing. So therefore, you potentially can see increased loan demand. Okay, but their net interest margin, okay, the profit can be so-called, they can be squeezed. So therefore, for bank, it's actually a mixed bag during rate cut. Okay, so you need to be very careful on this. Real estate, okay, REITs actually benefit from lower borrowing costs and increased demand for property. Okay, so basically, for example, this Capital Integrated Commercial Trust and also Maple Trees Logistics Trust, okay, these REITs, most likely they will benefit more because REITs actually depend a lot on borrowing. Okay, they borrow from the bank, for example, to expand, to buy more property, etc. So basically, all these typically will do better, okay, when Fed actually cut the interest rate. Small cap stocks, okay, smaller companies are often more dependent on debt financing. Lower rate can significantly improve their profitability and the growth aspect. Next, okay, we come to the international stock. Okay, so when Fed cut the interest rate, US dollar will be weakened. So therefore, a weakened US dollar, they actually make international investment more valuable when converting back to dollars. For example, I'm based in Singapore. Okay, so when I actually invest, okay, onto, let's say, America stock, okay, because of the weakening US dollar, I will have a better exchange. This actually make me a better profit. Okay, so basically you can see that it's basically two win. One win is on the stock, another win is on the conversion. So therefore, okay, this is actually a win-win situation when you actually invest into international stocks. Okay, so it also gives us a tailwind to large multinational companies in Europe and emerging market. Okay, so guys, before I continue, I'd like to urge you guys to help this channel by like this video. When more guys actually help to like this video will have a better chances to reach up to a larger audience. So guys, help me by pressing the like button now. Also guys, okay, what is your suggestion on the stock move? Okay, so feel free to comment, okay, so that we as a committee can benefit together. I also urge you guys to support this channel by subscribing to this channel and turn on your notification bell. Once again, thank you so much for strong support. Let's quickly continue on bond. Okay, so basically, I'm going to discuss on your bond portfolio what will happen. Okay, so this is where the effect is most direct and immediate. Okay, so basically for share, maybe it's not that so-called fast, impactful. Okay, but for this case here, for the bond, it is most direct, and in fact, it will be almost immediate. This is actually a good news for existing bondholder, okay, which means that you have invest heavily onto bond. This will be good news for you. So when actually interest rate fall, the value of existing bond, okay, which you will issue at the older and higher rate, they will actually increase. So if you own individual bond or bond fund, you will most likely to see an immediate price appreciation. Okay, which means that for those already bought a lot of bonds, okay, this is actually a good news when Fed actually cut the interest rate. Action. this could be a good time to do some form of rebalance. Okay, so if your bond allocation has grown beyond your target, consider selling some of your bond funds to lock in those capital gain. Okay, so basically, I will not be able to advise, okay, on every individual case. Therefore, you need to do a good time that you actually need to see whether you need to rebalance your investment. So now, because you have made some money, okay, on bonds, okay, you may consider to sell away before it's so-called matured. So that will be a bad news for new bond buyer. So if you are looking to buy new bonds or contribute new money to a bond fund, then you will be locking in a lower yield for the foreseeable future. Okay, so this may be issue. So what you need to do, okay, extend the duration with cautious. Okay, longer terms bonds are more sensitive to rate change. Okay, so basically, if you have a so-called long term in terms of time, okay, they are actually very sensitive to rate change. If you believe rate will continue to fall, shift to longer duration bond can maximize gain. However, this also increase the risk. Do not reach for yield by taking on excessive credit risk. Okay, for example, take on all those junk bonds unless you are fully understand the risk. Okay, so basically this is most of the time, okay, when Fed cut interest rate, okay, I will not suggest you guys to go into bond. Okay, so basically you can try other thing. Why you need to come to bonds? Basically for me, okay, so if Fed cut the interest rate, bond may not be feasible at this moment. Okay, unless you are those that early on already invest onto the bond. Next, let me explain your move on bonds. Okay, coming to the existing bond, which means that you already bought the bonds early on, as I mentioned earlier on. So if you already own the bonds, especially long-term one, okay, their market value will likely to increase. You can potentially sell them for a capital gain. Okay, so basically this is my suggestion. Do a rebalance. Okay, so if you think that you have a lot of bond, this is the right time to sell them when Fed cut the interest rate. The shift, okay, in your strategized move. So when interest rate fall, the era of high yield on new cash is ending. Okay, so you might consider locking in yields. Okay, consider buying longer terms bond before the cutting cycle begin to lock in a higher yields for a longer period. Okay, so if you have no choice, you still think that bond is your so-called your types of investment, okay, consider to buy them in term of a longer term bond. Next, lower credit quality, okay, to find higher income. Investor often move down the quality ladder into the investment grade corporate bonds or high yield bonds, which carry more risk but offer better yields than government bond. Okay, government bond is actually most of the time the most safe. Okay, but because of rate cut, okay, investor actually will take on more risk, okay, by achieving higher yields bond. So therefore, they probably will invest onto those corporate bond. But this may be issue, okay, because corporate bond, okay, they are actually more vulnerable to, for example, Fed interest rate, or even potentially they can even go to zero. Okay, so with this, I like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. Thank you so much.